Warriors, good turnaround tariff Tuesday today. Any other teas? Anyway, okay. Hi. Hi, Bran. RC, Ingmar, Scott, Steve, Mike, Chief Trader Blake Morrow, James Groom, Ryan, Senior Broker. Remember those titles? Oh, you're not a junior broker anymore because you're over 40. So anyway, it's good to laugh in the morning. Hi, James. All right, everybody. Aloha. Came in here, has relocated to Maui. So nice place to trade from, buddy. What about the panic cycle? Ben, you were right on. Ben Maldonado's in the house to take a victory lap. Oh, yeah, there are P's and panic cycles. Okay, so let's go to work. And I think that and Greg is here. All right, so I'm going to be real quick. So I think that there's a new kind of paradigm now. And when Blake and I and the team, we all talked about it. Was that there would not be a safety bid during risk off in equities. And that's, we've had pretty good evidence of it the last couple of days, haven't we? All right, dollar retesting new lows with the market. So, recency bias, may take a while for, people to make that shift. Just something to keep an eye on. I think it's probably because of outflows from into other markets that have been underperforming. I didn't see what the DAX did, but other markets have been outperforming. But I do want to just put out an idea. Doesn't mean that you get long here, but the S&Ps, we have record numbers of puts. We're not confirming here yet. Going into a big expiration in about 2 weeks, 2.5 weeks. So all the call money is fried, right? Because I mean everything's gone down. So people that were buying March calls and almost everything, um, even the banks are acting lousy. They've already collected that premium. So wouldn't it be nice for them to get back some of that premium on record put buying going into expiration? Just a thought out there that sometimes things could be mechanical, um, so that the house wins or loses as little as possible. I'll bring Ryan in on that because I know you follow the options in the currencies. You ever see that happen?
What's that, mate? All the
Like
getting the
all
calls
the
in.
calls, like say Euro calls, they were all, they're not going to end up in the money because Euro's broken 5 handles, right? So the
Yeah,
people that are making money are in puts and going into an expiration, they rally back to, a strike that takes a lot of the put money away.
yeah. Or as you say, it's the brokers who are writing them. They're making the
Yeah,
money.
yeah, yeah. But I'm sure there are brokers that were writing puts too, and they had to cover those positions by selling stock,
Yeah,
right? So, or buying the stock, right? If they're selling puts. Anyway, so just a thought, we're at new lows here. I've never seen volatility like this. You know, this Bitcoin, are we putting in a higher low to make another run? And and the dollar challenging new lows. I tried to buy it yesterday, didn't work. You guys were right about yen. Couldn't even get to 52, but the yen is diverging. We have yields still falling, but look at this on the 10-year. So we've had successive new lows, and the last confirmation was Feb 25th. So we're diverging for a couple of weeks. We'll see what TLT does. it too with these new highs. So I think the market's on that one side of the boat, taking a shot at the long side of the yen down here.
Dale, hello.
Hey,
Um, CTAs have been very short and just starting to cover, and they have CTAs are basically very slow to move, so they're like trying to move a super tanker around, right? So they're going to
yeah.
be taking their time and unwinding for quite some time. So I think we have quite a bit more to go in yields, as I've been
Oh,
saying for a
okay.
while.
You have wrong for a while and then right big.
Yeah.
So why don't you take it if you want
Yep.
to?
Sure. Sure. Sure.
Go ahead.
Okay. So share. Desktop one. So we've been talking about the yields going lower for a while, and it's now manifesting well and truly. And when these 440, remember we're talking about 440. As soon
Yeah.
as that broke, we've gone 25 base points without any kind of retracement. And if you look at technically, what level is next? Maybe the 61.8, but really, I think we're going to be testing these lows again or close to. And it's a similar story with gilts, but they haven't broken yet. But I think yields will continue to drop. Let's face it, Trump and Elon Musk, they're trying to engineer lower yields across the curve. And how will they achieve it? Well, we've already had quite a
By
few.
causing a recession.
Yes, we've had quite a few layoffs, and we're going to have a lot more. And inflation is going to be dropping, and rents are going to be dropping, and the house prices are going to be dropping. Everything's going to be dropping. So I think that will clear the way for lower yields. And there's a lot of people when I talk about lower yields, people often say, "But what about the extra supply that's going to be needed? Because the eurozone are going to be European countries are going to be financing war, and the U.S. has a big deficit to cover. Yes, there's going to be extra issuance, but the the US and the European countries, they cannot afford to have high yields. They just cannot afford to have them for long. So if the external market does not take the issuance strongly enough and yields do not drop, they're going to do it. The central banks are going to do it because that's what they know how to do. So
Well,
um, I,
yield curve control like Japan for
like
20
Japan,
years.
yeah. At least in the short, not in the short term, but in a 1 or 2 year horizon, I think this is what's going to happen. After that, who the hell knows? But for now, I think this move still has legs. The market had been very one-sided, and it still is, but it's slowly trying to unwind. Um, I am starting to really favor gilts over treasuries now, but we need to break below this level, which is a few base points away. But really, we need to break below 440, 439, whatever this level is, and then it's clean air until 4%. So, um, I like both. I'm starting to favor gilts, but I need to see this drop below to make this break below. Um, so yields in the dollar, they have been correlated, and the dollar is going lower. I've said for a while, and I stand by that. I think both are going to resolve to the downside. A very clear level around 105 to 105.40, an area here which we should find support. Previous lows here, 200 DMA, some trend line I had drawn. I can't even remember what that was. Oh, there we go, internal trend line. But anyway, we're going to see some support around here or a bit lower. But I still think we're going to be heading towards the bottom side of this wedge, or whatever you want to call that. Um, Now, the big question is what happens with stocks? Because we have S&P has broken below this channel or close to being a channel, so this is important. But I've said this many, many times. I think 56.70 is the level. This is where we start making new lows. We take out what this was a high up here back in July 2024. And below that, I think the picture is a lot clearer technically. Here, we could very easily make this a false breakdown and turn higher, especially if yields keep dropping, which we all know is good for risk, at least in the short term.
Seems
So
like yields are dropping because risk off is happening.
yes, well, money has to go somewhere. You're right, Dale. Money has to go somewhere. I think at some point, um, there will be because we've seen this play so many times, this thing play over and over so many times over the past 20, 30 years. Whenever there's any meaningful dip, risk gets bought straight away because due to inflation, due to the way balance sheets keep getting expanded, there is no other way but higher. But of course, we could have dips in the meantime. The COVID one was an amazing dip. We could have another good dip. People are waiting to place their money. That's a problem we have. There's a lot of liquidity out there just waiting to get placed. So, um, I think if we break below this 5670 level, I think then we go towards 50 to 50, 5300. And my worst case scenario is 48. I don't think we'll see below 4,800. Still, that's going to be a big retracement. But in the grand scheme of things, not a terrible retracement, and not an unhealthy one, because you just cannot have something going up and up, in a 45-degree angle. So patience, I think. I have friends who ask me, when do we get short? When do we get short? I want to see this 5670 get taken out first. And yes, I
Okay.
will have missed the first part of the move,
So
but I
you're
think
going to get short like almost 8-10% lower
yeah,
on
yeah,
the
but I
top.
think that's when the easier part of the move happens, because this is
Sure.
difficult to call the top. But after that, I think technically you get the confirmation. At least I like that. And then theoretically you have a further move. You place your stops above, and then you trade accordingly. And if it doesn't work out, you get out. You move on to the next trade.
Okay.
That's my view. Let's talk about metals, of course. Everything is selling, and gold and silver is doing pretty well. Even platinum is flat on the day, which is very interesting because platinum is a lot more correlated with risk than gold. But gold is still looking fantastic. Silver also doing well. Still in no man's land. We know we need to break above here 33.45, 33.40. But I still like both. And I like platinum a lot, even though it is correlated with risk. I think it's very, very undervalued. Platinum is over the, given the long-term ratios and correlations. I think it's undervalued. But I still
Let's see
have.
it. Let's see
Sorry.
your chart. Let's see your chart on it.
Well, platinum is
It's a
also in no man's
range.
land. It's a
Yeah,
range,
wow.
yeah. But
Yeah.
if you look at the ratio, platinum to gold, platinum to silver, it's really at the lows, at the absolute lows.
I'd
So
put on that spread. That looks like a decent trade.
yeah, and there's also, I've said this before, there's also a macro theme on the back of platinum that it's used primarily in catalysts for cars, and the market had been convinced that there's going to be only electric cars going forward. Well, that's not going to be the case. There's going to be, I think, for quite a few more years, if not decades, there's going to be demand for internal combustion engines because there simply isn't enough.
Yay!
There's not enough resources. There are not enough resources to cover, how many billions of cars are needed in the world. And I think internal combustion engines are here to stay for a few
Yeah,
years
they
more.
they roar. The
Yeah,
EVs they whiz. It's like a
yeah.
whizzing sound.
They're like
I like to hear the engine.
exactly, yeah. And the other thing I really like is oil. I've talked about this before. I think we're getting now really, really close to this big support. And I hate to say it, but I think this is gonna break lower and make new lows. And that
Means
will
the
also be
recession's coming, right, Stel?
recession's coming. That's going to be deflationary, obviously, if oil goes down. So everything, all of this kind of ties in together. Um,
And
and
we
I
should
have,
probably talk a little bit about the dollar since the dollar is breaking down today. There's tariffs coming.
yeah.
That's the big mover today, right?
The cryptos are still a big mover, but yeah, the market is a little bit apprehensive of the tariffs and generally the things that Trump wants to do. And frankly, I'm not convinced about the kind of medium-term efficacy of all that. But
Efficacy.
they're smart guys. I have to I have to assume they know what they're doing, and
I mean, and
so
equities are in breakdown territory. We broke the S&P big channel that we've been in, and this is a big development today.
yep, yep, yep. We showed that. Um, anyway, let's see. It is breaking, but you need to see. Personally, I like to see weekly closes to see if something is confirmed or not. But we definitely are breaking down. And let's not talk about cryptos because they have been on an absolute roller coaster ride, giving back all the gains from the Trump announcement on Sunday. and I mean it's looking weak. And even people like, I don't know if you follow him, Joe Weisenthal from at Bloomberg. He was kind of writing today on X saying, well, if you think about it, there's no real fundamental behind cryptos or any actual use. It's more about sentiment. And I'm like, yeah, exactly. So if the market suddenly doesn't like cryptos anymore, where's the value? Where does it stop? 80,000, 75, 10? I don't know. So
It
yeah.
really
Okay.
it really depends how big the pullback will be on stocks, because volatility is obviously much bigger on cryptocurrencies. But if you look at cycles, this pullback perfectly matches with what's going on the stock market. So
Yeah,
if the
wave
stock
four, right?
so if the stock market will be able to stabilize, I just still think that cryptos will see a rebound. Of course, not necessarily that we will see new highs, but I still think that at
Okay.
least Bitcoin can do well.
So that's
Yeah,
a change. You're not expecting new highs in the S&Ps now?
I
Yes,
agree with both, Dale, by the way.
Mhm.
Of course, there is no fundamental backing to cryptos. What cryptos have been is a vehicle of speculation, right? Like the highest beta type of risk asset. So cryptos are only going to do what the rest of the risk assets do, and in most of the cases, multiplied in
uptrend.
in reaction, as we said, a higher beta proxy for risk assets. So if we enter a period of increased volatility in stocks and a risk of a move that's bigger, there is absolutely no way that any news can really prop them up.
Very sexy voice, by the way, Steve.
I know.
So, so Greg, your opinions about Bitcoin. I was just pulling up Greg's analysis on Forex Analytix here.
Yeah.
What your so longer term? What do you think is going to be happening here?
Longer term, I still think that in the next few weeks we will see stabilization on the stock market. I just think that maybe the S&P 500 itself firstly has to retrace to November levels, because in November, when Trump won the US elections, that's when everything started. And we were seeing a lot of markets pulling back to these levels to November, and I think that this could be very important support. You can see that Trump won US election at level 5784 level, but that's the S&P futures. So that's, I think, very important level. A lot of liquidations can occur if this level is retested this week, and that could maybe stabilize the market a bit and we see a rebound. We can see weeks fear index moving quite aggressively to the upside. We have seen the previous occasions in a very similar levels here, and if we'll start moving close to 28 or 30, I just think that we will certainly be in the stage where we could stabilize a bit and try to find some support there. So in such case, if the stock market would really stabilize, I still think that cryptos will also recover. But of course, now when we are just making 3-4% of a pullback on the S&P 500, the Bitcoin itself, obviously, and other altcoins are making massive drops, which is actually totally normal.
So let me ask you guys this, and Dale, I think your opinion really this is going to be important here. Let's say, and because cryptos is already giving back, post, well, really close. You look at like Bitcoin and you go, okay, well, we're at levels that we haven't seen since like the election night, right? So you're seeing. We're getting close to there. There's the election night right here, right? We've already retraced a lot of that. And how about if we break down? And that goes same with the S&P. Like if we start breaking levels that we were at during the election, you're giving back everything that you got the Trump bump and everybody bought for that. So what happens to sentiment, should that happen, Dale? What are your thoughts here? I mean, because this is, let's see, here's election night. Here's the S&P. We are below those levels now. I mean, does sentiment turn south if we really start breaking down? I mean, my opinion is it does.
Well, I've been
almost
looking
there.
for 4,900 for months, the megaphone formation.
Yeah,
So
or
just
or
a
it could be
step at
that
a time.
that
Yeah.
yeah, one step at a time. That could be that long-term channel
Yeah.
support, excuse me, and breakout area would be
Yeah.
right here, 4,900, 48 something or rather.
And
That
then
seems pretty
7,000.
logical, right?
And then 7,000 when the Fed gets out the bazookas.
Because they're gonna have to. I
Yeah,
mean,
so
the
that's
Fed's
what I think.
yeah, they're gonna have to. We're gonna go back into lowering rates. We're gonna have to do quantitative easing, some stage of the game. All right, that's all. That I think, and Greg, I hear what you're
Yes,
saying.
Blake, with the only exception being that
Uh-huh.
oppositely from all the previous times during the past 20 years, this time around, it's going to be much harder
To turn it.
for the Fed and the rest of the central banks to excuse this type of action, because the previous times they had to make, of course, ridiculous claims that having, for example, inflation of, let's say, 1.5, 1.6, 1.7% was a problem, and we needed monetary easing to push that to 2% target, which was a made-up target, of course. The problem is that once they created back then that 2% made-up target to excuse their action back there, now they've set their bed and they have to sleep in it, because once you've said that there is a target of 2% inflation, but inflation in Japan is now running closer to 4%. In the US, expectations for inflation, and I'm talking about expectations because the Fed seems to have in the past given a lot of credibility to that, is for inflation to run at 3.5%. In some metrics, there is also inflation expectations for a year to be closer to 5%. So how are you going to do this time around this type of monetary easing when you can't use your price stability mandate? And quite the opposite, your price stability mandate, even the way you've turned it around, would indicate that you should be tightening monetary policy, not the opposite.
Right. So it's gonna be a very difficult task for the Fed, but they're gonna do it anyway.
I agree with you.
Right. Like, their argument will be price stability. So in order to provide price stability, they're gonna have to adjust rates appropriately. Which
they're going to have cover from the president, he'll say, "See, I've been saying you needed to lower rates all this time."
Great
So
point,
he's
Dale.
got, all right. So it's not like he has to justify something that our new president wants.
Yeah, also, guys, don't forget that Trump, by definition, is a real estate person, right?
Yeah.
So for real estate people, zero rates, even negative rates if possible, or in any case, negative real rates, right? Because nominal rates can be positive, but real rates being negative, is a win-win situation. Because first of all, people that are in real estate almost exclusively create buildings and buy real estate using credit, right? Second of all, real inflation does not hurt assets with intrinsic value, because assets with intrinsic value readjust their prices based on the real inflation.
So I agree with everything you're saying, Steve. We're running a little bit out of time, but I think they're really great points. I do want to talk to everybody, just ask, especially Ryan and K-Man that have been, they did the Flow show. I want to get their opinions here about what we should expect with tariffs, because what we're seeing, and like I said, thank you again, Steve. And then Greg, I'll also want to come back to you really fast. We got the euro, and the euro popped above new highs. Now, I do want to point out to everybody here, been looking for a move to 105.80, 105.75. There's a triple confluence of long-term 38% retracement, 161% extension of the last move lower that we just got over the weekend, 127% extension of this. It's actually the 127% extension of this move right here, or it's actually this other little move right here. Anyway, triple confluence of right here, 105.80s. I don't know if we're going to quite make it up there. I mean, can the dollar weaken in the face of all of these tariffs that are coming? I see a lot of people are calling for extreme dollar weakness right now. Are we going to get that, Ryan?
Extreme dollar weakness?
Yeah, this is the dollar's going to break down and shit the bed right now. Is that what we're going to get right now as all these tariffs are hitting the market?
It's possible because we know the market can always go to extremes.
Yeah.
We've gone from pricing 2 cuts to 3 cuts. I wouldn't be surprised any further weaker data. We're now pricing in May and probably even March for the next Fed cut instead of June, SEP or DEC. It's going to be slow going for the euro. I said this. I was umming and ahhing about a break trade when we were testing this a week or so ago, a couple of weeks ago. I've gone with one today. You've got those fibs. We've also got the 50% of the 109 move down, that leg. That comes in right around the high at the moment, 105.57. Then you got that 38.2 at 105.73 for me. There's a lot of tech in the way, and we know from the euro and what it does, it's not often a very fast mover. But look at other pairs, dollar yen's crap in the bed. It's just tested 148 after that. 149.
It is, but it's also at channel support. And if you look at the 6J, which is, obviously the yen contract, we're probing that resistance. Is it ready for is the yen really about ready to make a big stinking move?
Is it ready for the big time? Come on.
Is it ready for the big top?
I don't know about futures.
No, I said big top, like the circus.
Big top or brick top?
Into one.
Futures don't lead
brick top.
Futures don't lead spot, so I worry about what spot's doing. And we've broken that 148.80 area, confirmed it, and here we are testing the 148 lows not too long ago. So it depends what you want to look at. You look at dollar MEX and it's rallying. So is the dollar crapping out? No, dollar CAD is still holding up. Aussie dollar isn't rallying back to 64. So it's all different speeds, different pairs. It's not, unfortunately, to burst your bubble, being a Yank, it's not all about the dollar.
It's bullshit.
Hey,
you know what?
Hey.
Go back to your you go back to your football matches. We call it soccer. All right. So all right, K-Man.
Don't forget
I'm going to bring in a more American friendly person. Let's bring in the Belgian guy. K-Man. What do you think about this dollar right here, right now? I mean, should the dollar crap the bed in the face of all these tariffs being unleashed across the world? What do you think?
Good question.
It's not only tariffs, but the tariffs weigh on they are going to weigh, or they will weigh on global growth, and that's what the market is trading right now, rather than inflation or whatever. And then you add to that war situations and stuff. And I think we've seen 2 moves over the past 2 days. That makes me think that not the moves that we are seeing now can hardly be called trend forming moves, because we have seen already in 2 days' time 2 different reasons. Yesterday, the euro and the sterling got bought against everything because the yen didn't move too much. Aussie Kiwi didn't move at all. Canada and Mexico were too busy with themselves. But today, or towards the end of the day yesterday, it started to morph into a more pronounced dollar move, especially today. So that, to me, is a confidence kind of move right now. Now, the thing is, I mean, down to where is the confidence going to break down? Is it a complete breakdown? We don't know yet. I mean, that it's far too early to tell, and that's why I'm saying, and I've been saying on the shows, yes, I'm short dollars, but I'm trading it around the core. I'm moving in and out of positions still a lot faster than what I used to do when things were clear. Now they are far from clear. So that is one of the reasons I think why we cannot call this a trend yet, although we have seen yields come down a lot. But then 2 weeks ago they were a lot higher. Who will say that in 2 weeks' time they may not be a bit higher again if all of a sudden we are seeing data out of the US start tomorrow with the ISM, move over to the NFP report. If those numbers hold up, you might see a move back into the dollar. Add to that I mean, Trump was a bit quiet, but the Europe, if you talk about euro dollar, for instance, because euro dollar will need one, a lower dollar, but also two, perhaps more confidence in the euro to really get going. What if tomorrow Trump slaps tariffs on the
Europe.
European Union? I mean, then
Yeah,
you're back at
that's been my
103.5.
argument the whole.
But that is still part of the fluid situation that we have now. I would
Right,
argue
and
though-
that's been my argument the whole time. Like, I'm not chasing the euro up here because Trump's going right after the EU, and I know
Yeah.
they have to increase spending because of defense spending and all that other stuff.
He
But
doesn't care.
he doesn't.
Yeah, but-
He's going to hit them upside the head. I mean, so chasing the euro up at 106 makes 0 sense right now to me. Now that doesn't mean that we can't go
We're
to 109.
chasing Europe right. Chase Europe right into China's arms.
Yeah, there you
Yeah,
go.
but
Hey,
that's a different story altogether.
Yeah. Guys, we're bleeding into Dale's interview. He's
Jerry isn't here, so you guys could go. I'm looking for him.
Oh, for Carley? Okay, sorry. Okay,
Oh,
Ryan,
it's
I'm sorry.
Carley today?
It's
Okay.
Carley. Yeah.
I'm spaced. All right. Carly's probably here.
Carly's probably here. She's probably waiting. And I was actually hoping I'd meet her at the Money Show. But let's let K-Man, while he's doing that, K-Man, go ahead and finish up. I'm sorry, I didn't mean to interrupt it. Just I was running on time.
She's not here.
No, so I was just saying
No,
that
I saw her. I promoted her.
Oh,
Oh.
okay.
yeah, all right, then
I see her
we
now.
can talk about it another day. Just do your interview, mate. I mean, that's more important.
Well, just to wrap things up, because
Okay.
we do have obviously a full team here. You guys, if you're not listening to Ryan and K-Man's show, The Flow Show, I even listen to it, the recording. So, I just go on X and I listen to the recording as I'm preparing for North American trade. It's an hour late for me because I was sleeping during the live show. But I listen to these guys every morning. If you don't do that, you should be doing that every single day. We're very, very happy that that Grega and Stelios joined us today, and Steve made it for a very full house. I know everybody didn't get an opportunity to say everything they wanted. Hell, I got so much I want to say about the dollar, but I'm going to do that on the Morning Edge in about 45 minutes. If you are a Forex Analytics subscriber, I do want to just kind of leave you guys with this. So if you guys are not in Forex Analytics, this is the trades room. Last night I got triggered into a dollar mech short at 20.92. I already closed out of that. I started buying dollars and I just scalped out of those. K-Man's very active here. So is Ryan, and so are so many other traders posting exactly what we're trading and why. And I'm trying to short the dollar, or trying to short the euro today. I'm just trying to get much better prices than we're at right now, but I'm afraid that I might miss the boat. So I'm out buying dollars. If you want to know why, jump in the Forex Analytics chat room. It's only $1 for 10 days. Try it out. It's the best $1 you're going to spend. Make sure you download the mobile app. And with that being said, Dale, I'll pass it over to you.
And if you don't have a dollar, you're probably not suitable for taking risk in the markets.
That's a good assumption, Dale.
Don't you think there's
yeah, you might have just hit that one on the nose.
Mini micros, anyway, put it in a slot machine. Anyway, that dollar, it's all about added value and return by the value that you get. So I have Carley here, and Carley, I don't know, I'm just a space cadet lately. It's great to have you back. Happy New Year, even though it's March.
Thank
Good
you,
to
Dale.
have
Good
you.
to be here.
Yeah,
Good to be here.
Wow. Let me ask you, do you like these markets, Trump 2.0 compared to 1.0?
I think, so far we haven't gotten bulldozed over. So I will say
Okay.
for us, it's been a positive. I think the big difference is, let me just share my screen here.
Sure.
I mean, the first time he was elected, nobody knew what to expect, right? It was just kind of
Right.
surprised everybody. No one knew what was going on. I think this time around, a lot of that stuff was priced into the market already. And to be honest, I think the market's got a lot of it wrong. So for example, like the part of the Trump trade was hedging inflation, which meant buying commodities, selling treasuries. And
Yeah.
not only are we unwinding that, but I think we see like a complete reversal of that.
Reversal.
Yeah.
Okay.
So that's where
Okay.
we're at.
Okay. So you're looking for 50 crude WTI here.
I am. So
Oh,
this obviously the March 2022 highs were an anomaly, but we've really been in a sell the rallies mode since then. I know most speculators are trying to buy the dips, but the reality is selling the rallies has been the way to go. And we're coming up against some support at 65. This has held for years. I don't think it's going to hold forever, especially with this administration. The last time Trump was in office, oil was trading 40 and 50, not 70, 80. So I think we're just kind of entering into a new phase, and oil's not the type of thing you can just magically turn on the spigots for, and it appears, you know, as soon as you make that decision, there's infrastructure time and cost and those sorts of things. So it's a time thing, but as we all know, markets are mental, and I don't think the market's going to wait for all that oil to come online. I think it prices in advance, just like markets do. And so I think we eventually, sooner rather than later, break 65, and I think 50 is the most likely target. So that's what we're looking for.
Do you think that the one fly in the ointment could be some type of Middle East problem? You know, I've been reading about Iran's move to, you know, their progress on processing uranium. There's even people saying they already have a few nukes.
Sure. Obviously, those are wild cards. I will say that each of these rallies occurred on some sort of Middle East turmoil news, and you can see they get smaller as time goes on. And you can also, you can't see it in this chart, but what we noticed when we compared the chart, the price action to the COT report, which tells us who's long, who's short, it's issued by the government.
Yes.
Every time speculators went long on these Middle East turmoil fiascos, they were a little less aggressive each time. And so speculators have kind of, they've probably been burned too many times on that type of headline. And so they're not as willing to put money to work. So unless there's something really, really major, I believe that the most likely scenario is continue to sell rallies and market dribbles lower.
Okay. How are you approaching it? What kind of option strategy?
So we've been like on the spikes, we do things like sell calls and then buy put spreads. But now we're sitting on support. It doesn't really make any sense to have short calls out there or to be short futures or do anything aggressive, not in our opinion, because that's just not how we approach it. So what we have on is butterflies. I wonder if I can find it real quick. Let me see.
So butterflies, is that a put and a call where you're taking in premium on both sides of a range?
That's not it. Shoot, I should have had something prepared for that. But
that's okay.
Basically what we're doing, nope, that's not it either. Anyway, basically what we've done is we're using the May options. We bought 70 puts. We sold 265s and then bought the 60s. So we've got a spread between 70 and 60 is kind of what it works out. And so we can make as much as $5,000. The risk is limited to about 550, I think is what we paid to get in. So that's what we're doing. Yeah.
Really nice structure for that kind of payoff. And the risk is 5.
It's only 500 to make maybe $5,000. Now the odds of making the full $5,000 are pretty slim because you got like all the stars have to align. So we're not really going for that. But if we could peel off
a couple grand.
Exactly. A couple grand, we would be delighted because it's such a low risk, low reward. The reason we do it that way is we don't want to have like if we might be wrong, you know, this is our consensus, but that doesn't mean we're right. So if it holds 65 and bounces back in our face, who cares? We're only at 500 at risk. And what we would do is if the market rallied, we'd buy back our short puts and hold on to the long puts and hope that it rains. So
okay, so guys, you know, if there's many ways to skin a cat with option positions and
There
be able to sleep at night,
Correct. That's the goal.
right? And
Yep.
the hesitation of taking home leverage positions
Mhm.
can be, this is an alternative. So you want to
Mhm.
learn option trading on these markets. Here's your person.
Yeah, I
So
mean, trading is a very stressful and emotional endeavor. In my opinion, using options just takes a lot of the edge off. And so most people are prone to make better decisions when they're not under stress. So that's why we do it.
okay, all right. So
Okay.
what's this?
Okay,
Oh, here we go.
let's look at gold here.
Okay,
All right. Um, literally everybody's
long.
bullish gold.
Yeah.
Everyone's bullish gold. We went short a week or so ago and took profits on Friday. Luckily we did
Yeah.
because we're right back up. But we'll probably do something again with options. Again, maybe sell some calls, buy a put spread. The last round we were able to sell 33.50 calls. So we're talking, we can be right by $400 and not really get into too much trouble. And then we use that money to buy 2,800, 2,700 put spreads. So $10,000 payout, free trade because we've collected enough premium to pay for our long option spread. But there's lots of margin and risk above 33.50. So that's how we had it structured. And we'll probably just slap it right back on here if gold gets a little higher. I know it's an unpopular position, but I think gold's kind of a dead man walking. I really do.
I like that weekly divergence.
Yeah.
We need some divergence on the shorter term time frames. I think we're,
Right.
what's a
Yeah.
daily? Do you have the daily? Are we confirming if we make a new high?
I can pull up the daily, sure.
No.
So,
So even if we went to the top of the channel, I don't think we're going to take out that high.
On the RSI, yep, I think you're probably right. It's really, really sluggish. I would love to see, honestly, I'd love to see 3,000. I think that would be, we would really dig in and get aggressive on shorts up there.
Yeah.
It's going to be interesting. This is the monthly chart. I was showing you the weekly before, by the way. And I think this market is almost identical to the 2011 market. You can see we had 3 big waves up, and then 2011 it peaked out, and it took a decade to get back there. Now, is it going to take a decade to get back to these highs? If we are in fact topping out like I think we are, who knows? But even if it takes 5 years, I don't want to be there for that. So here's what I've got. I think we're in the 3rd wave. I think it peaks out somewhere around 3,000. Now this is an art, not a science. Maybe it's 2,950, maybe it's 3,100. I don't know. But in that ballpark, I think you're probably going to be better off. If you made some money on the upside, that's fantastic. It's really time to protect it. We're really encouraging people, especially people holding the physical metal.
To switch to silver?
Well, I'm going to show you a chart in a minute of gold and silver.
Okay.
No, to really just hedge your risk. It's really hard to sell physical gold. I don't think people understand how hard it is. Like if you're someone that has a bar or some coins, just a handful of them, or maybe even a trunk full, it's probably not that big of a deal. But if you have any type of size, it's really, really hard to sell it. It's very illiquid. People would be shocked.
The spreads.
So just,
it's
and
they
wild.
know if people are selling, they're desperate.
Exactly. So the best thing to do is if you are holding bullion, just go into the futures market, sell a futures or put an option spread together to protect your prices. And then you can shop around because if you have a decent amount of gold, you're going to have to shop multiple buyers, which is a big pain in the butt.
Yeah. That's that's a real nice contrarian trade. Have you backed it up with COT stuff?
Yes. So most people, so we follow a sentiment. It's called bullish sentiment index, and it basically polls in industry insiders. And about last I checked, I think one comes out today, but it's probably somewhere around 73 to 75% are bullish gold, and that's lopsided. You don't want to see those kind of numbers because that's usually you're in the last stage of the rally. And then on the COT report, it's the same thing. Now, COT report isn't actually wildly extreme, but there's enough people long here that we're kind of matching some of these other highs. So it's very possible that most of the buying power has already been employed and everybody's long and caught. And if it turns over, they're going to be caught on the wrong side. So that's kind of what we're thinking might happen.
Could there be any event that would cause a central bank to liquidate some of what they bought for a while?
You know,
Or
central
they
banks
don't do that?
they don't really liquidate. They buy and they hoard and then
Yeah,
they
okay.
just sit on it, which is pretty interesting.
They
I'm not
used
sure
to
what the
sell
end
it.
goal is.
Yeah,
They
they used
used
to,
to.
but not anymore.
Right. What the end goal is hard to say because I mean, I've been kind of saying this on social media and on TV. You know, the US has a whole bunch of gold that they're just sitting on. They haven't even marked it to market, so we're not getting any type of benefit whatsoever on the books. And we're not, you know, I don't
Well,
think it's a bad idea to,
they're talking about revaluing it and putting it on the
right.
books. Do you buy that
They
story?
should. I think they should at least revalue it. I'd go a step further and I'd sell it. I mean, what good is it doing? It's just sitting there collecting dust. I know nobody wants to say that, but um, nobody can buy, like you can't, it's almost impossible to fully liquidate something like that in a short amount of time. So it's really
So
not
why
an
did they
asset that's,
ship all this gold back from Europe to the COMEX?
the idea is there's a lot of people that think that it, and this is what's crazy too, because we don't know, are the tariffs going to apply to gold or not? So a lot of people assumed that gold in the US is going to be more valuable because you don't have to pay the tariffs bringing it in. So
Okay.
once the whole tariff thing started coming out, the gold in New York, like on the futures, started trading $20, $30 to a premium than London. And,
Yeah,
you know, then this all, yeah,
the lease
to be,
rates went up,
yeah,
everything.
I mean, maybe people are smarter than me. I don't know. But to be honest, I feel like humans are very emotional. And I think sometimes they act first and then think it through later. And I think that's what's going on, to be honest.
Do
I
you
think
like
it's
dogs?
crazy.
Do you like dogs more than people?
I do.
Okay.
I do.
Everyone raise their hand if you like
Yeah.
dogs more than people. Anyway,
All right.
all right. So
Okay.
that's a real interesting one there, Carly.
Yeah. So this is gold to silver or silver to gold. Most
Right.
people look at this as a ratio.
I'm
So,
still seeing the gold chart though.
oh,
Monthly, gold monthly.
are you really? Okay. Hold on. Let me
Yeah,
change my sharing. Sorry.
no problem. Live TV. Because I'm thinking maybe it has a 95 in it, but you know, I've even told people if it wasn't such a hassle
Okay.
to
There
sell
you
their
go.
gold and buy silver. Okay, so
It is.
you had
Okay.
okay.
Okay. Sorry about that. I didn't realize it
That's
didn't switch.
all
All right.
right.
So this is gold to silver. The ratio is somewhere around, I'm not looking at it in real time. It's changing.
92.
It's in the 90s. Okay.
Yeah.
You know, 70 might be a more normal area. So a lot of analysts are out there saying, well, the most likely, you know, everyone assumes silver has to catch up to gold. That's kind of the
Right.
assumption.
Right.
I'm not buying that. I'm
Okay.
actually, because if we saw like in 2011, again, I mentioned this is a lot like 2011. I'm seeing so many similarities. In 2011, it was silver that outperformed gold, and you didn't see gold catch up to silver. It actually was the beginning of the end, and then they both rolled over and had a decade
Yeah.
of just pain and suffering. Again,
Lost
I don't know if
decade.
it's going to be a decade of pain and suffering, but I think we're going to get something similar. I think we're probably like in the last hurrah. I don't think silver catches up. I think they both roll over, and maybe silver outperforms, like maybe it goes down
Holds
less.
up. Yeah.
Yeah.
Right.
But
Okay.
I think we're going to see something like this somewhere over here. So again, I can't see the future. All I'm doing is looking at all the patterns I've seen in the past and trying to figure out what might happen next. And that's what I think is going to happen.
Okay. Why don't we address the elephant in the room? Stock indexes.
Okay, we could do that. Okay. I have a really uncomfortable feeling about the stock indices. I think I've been talking about this for a long time. I think that produced, we've manufactured prosperity through
Yes.
basically pumping money into the economy. And I think that's explains all of this. I know we would like to talk about, yeah, but AI, and yeah, but this, and that's part of it, but I don't think that explains the magnitude of this. This is really just, these are stunning numbers that we're seeing. And the crazy thing to me is, if you go on social media, everybody thinks it's the end of the world. And look at, we're literally like 6-7% from the all-time high.
Right.
We're still, in my opinion, way out of bounds relative to fundamentals and historical norms. Historically, we should see this market probably in this type of trade range. So 45 to 3,500, not 65 to 45. And I think even if we saw 45, people would really lose it. Yeah, would really lose it.
I
And
49. Let me ask you, because I know you follow sentiment, and I was reading that this is the most unusual top, because
yeah.
tops are usually fraught with euphoria
Yeah.
and bullishness, and this was the most bearish at any top. It's
Yeah.
like everyone got it right. They were bearish
Right.
at the top, and the bulls were using that as a rationalization to
Yeah.
stay long.
Right.
What are you doing with that information? Does that mean that there's going to be one good rally so that take away the put premium maybe into option expiration
Yeah.
in S&Ps?
We've seen sell-offs this time of year before. Like this is a pretty good example. This is COVID
Yeah.
usually when you're like the February, March time period can be pretty dramatic.
Yeah.
I would love to see us go back and retest highs and that sort of thing because I'd like to get some more things
That's
on.
why it's not going to happen.
It's not going to. I don't think it's going to happen.
Yeah.
I think it's done. Honestly, I think we get something like we saw in COVID, where we go into the March expiration and it's just a bloodbath. I could be wrong. Yeah. But I think that's kind of, there's a pretty good, let's say there's a better than 50-50 chance that happens. And that for that type of scenario, that's pretty high probability. Yeah, I don't know. It's just odd. We'll see. There's a lot of leverage in the system.
Are you doing anything with any kind of option spreads or?
We had encouraged clients to hedge with basically sell calls, buy puts, that sort of thing. Honestly, we don't have as much on as we wanted to. We got a little greedy. We were looking for 6,300 to get aggressive, and it just didn't quite make it. So it is what it is.
A lot of people are looking for 64. They're still waiting for 64.
And they might be waiting a while.
And some are still looking for 7. But I've seen a case we could go to 4,900, and then the Fed really gets the bazookas out, and then we have a rally back half of the year to new all-time highs, 7,000.
That could happen. I don't know. We'll see. I mean, I'm thinking 4,600 is probably our target. I wouldn't be shocked to see the 3,000s. I know that seems impossible, but it's not. We've seen those sorts of things before. So we'll just have to play it. It won't be boring. We'll just leave it at that.
Yeah.
It's not going to
So
be
maybe
boring.
Carly, instead of new highs, maybe traders, if we're lucky, get some type of low in here after the announcement, and then have a 2-week rally, maybe halfway back like it did yesterday.
Sure.
That was halfway back in 3 hours, basically. That was halfway back.
It was, yeah.
Right?
Yep. Bear market balances are big.
If you want to learn about options and across the board, Carly does it. How they get in touch with you, Carly? Because
best place to go is decarleytrading.com. You can also find us on social media. So if you're on X, it's at Carly Garner's my handle. But if you just search for Carly Garner or DeCarley Trading, you'll find us. But this is our website. You can sign up for a free trial of our newsletters, and there's all kinds of free information there. So even if you don't choose us as your brokerage, you might get a little bit of a education. So
and one thing that's important in this environment of scams everywhere, right? They're regulated, okay?
We are. Very much so.
I mean, the NFA comes in and they do an examination.
Yeah, this is how you know. Right at the bottom of the
there you go.
Plenty of risk disclosures. Everything you see is going to have a risk disclosure. Yes, we're very regulated, which is good. It's good. I'm not complaining.
What's your minimum account, Carly?
We can open with as little as 2,000. So you can't do much with 2,000, but we could open that account, and we do all the time.
Okay, so for the short stops out there, to take a flyer or something.
Sure.
So, all right. So Carly, appreciate your looks. Very interesting what you're seeing in gold, and really everything. Does
Thank you, Dale.
does the dollar look finished to you? You don't have to
It does. It does.
It's
I can do
done,
it real
isn't
quick.
it?
I think it's done.
And you
Just
know
quick.
what? It's getting no safe haven bid when the market's selling off.
Yeah. No, I think we're
Do it.
going to at least 100, which is the bottom of the range, and probably
Yeah.
the 90s. So
Yeah. All right. Carley Garner, everybody.
thank you.
Follow her at Carley Garner on X and go check out her website. Carley's also an author. All right. So if you want to learn, you're going to get a good education from her about options. So that's a wrap. Remember, don't just count your puts and calls, count your blessings. And see it. She is Laura. So people enjoyed it. Thanks, Carley, my trading warrior sister. That's a wrap, everyone. And good hunting the rest of the day. See you tomorrow. And thanks again, Carley Garner. Adios.
Thanks, Dale.